Hi everyone, welcome to our webinar, which is devoted today to the Bank of England's official rate votes. Good morning, Gabriel. So today I'm here with my colleague Max, and we're going to cover this data release webinar. So as usual, I will start with some fundamentals. Okay, so let me bring my chart to the whiteboard. Okay. So, the bank is expected to keep its record low 0.5% interest rate and the quantitative easing at £375 billion unchanged at today's meeting. So, even though Britain's businesses are urging the Bank of England to leave interest rates on hold well into 2016 to cushion the economy against global turmoil. Thus, the British Chambers of Commerce has recently upgraded its expectations of GDP growth of the UK economy, but cautions the bank's Monetary Policy Committee against pushing ahead with the tightening policy. So the business body now expects the UK's economy's growth of 2.6% this year, compared with the initial estimate of 2.3%. And in 2016, the economy is expected to accelerate to 2.7%, up from 2.6% expected earlier. So this would make the UK one of the fastest growing major economies. However, as I have already said, the British Chambers of Commerce has urged the Bank of England to hold its fire. In contrast, Mark Carney, the bank's governor, recently reiterated his expectation that a rate rise could become necessary around the turn of the year, even despite the global market turmoil in recent weeks triggered by fears of crash in China. However, at its August meeting, just one of the MPC's 9 members, the ex-CBI economist Ian McCafferty, voted for immediate rate increase. And this time, such a split of 1, 0 and 8 is expected to remain unchanged. What else? Here on the whiteboard you can see also 3 charts that actually should restrain the Bank of England on its way to hike interest rates around the turn of the year. So first, take a look at the first chart of British pound versus trade weight pairs. So British pound has climbed and it's up more than 17% on a trade weighted basis since the start of 2013, and the move by the Bank of England will likely make the pound climb even higher, which will be a tremendous drag for British exporters. And the strong pound has already been having a drastic impact on the domestic economy. Non-food retailers, for example, had their worst sales drop since 2008, as sales fell for the 4th consecutive month, posting a 4.3% decline that was led by 5.5% drop at fashion retailers. The second chart also shows the British Retail Consortium Shop Price Index, which has been in the red territory for for a substantial period of time. So the shop prices have dropped for 27 consecutive months. And finally, the most important trend that should inhibit the Bank of England from raising rates though, is the slow recovery of wages. While the lack of inflation means that real incomes have been rising since October, British workers suffered years of falling income, with an average annual drop of almost 1.5% between June 2008 and September 2014. So a lot of data to digest for the Bank of England before it moves and make some historic decisions. But now I guess it's time for us to switch to another topic which will be covered by Max. So he has something very special for you to prepare. So Max, the whiteboard is all yours.
Thank you very much, Eugenia. Hello, everybody. I hope you have a great day. So, yes, we, of course, today are covering the Bank of England decision on the interest rate, of course, which is accompanied by the decision on the asset purchase facility or the QE program. And, of course, we will have for the second time ever the meeting minutes and especially the vote distribution between different members of the Monetary Policy Committee, which is the most interesting part, I think, today, which is being watched by many analysts all around the world. Because as you can remember, last month, when we have covered the Super Thursday, one member of the MPC, as Eugenia has already told, voted in favor of raising interest rates. And right now, before we go to the technical part of the data release, I would like to cover some headlines from and some comments from different banks, which actually is the article which was published on Bloomberg just recently. You can also read that, and I will just cover the main things from that article. So, for instance, JP Morgan Chase Bank says that global events surrounding China, for instance, and the recent market volatility actually shifted risks around the call for the first rate hike of the Bank of England in the first quarter of 2016 to a later move. So they expect actually the Bank of England to start raising rates later than it is currently anticipated. And they also expect today's meeting minutes to sound more caution. So of course, it's all about recent market volatility. Speaking more, Morgan Stanley, for instance, says that Ian McCafferty can still vote in favor of raising interest rates, but on the other hand, another member of the MPC and the Haldane may probably even call for a rate cut this time because this member has always been the most dovish member of the MPC. But we will see, of course, in some 6 minutes from now. Concerning other banks, Goldman Sachs, for instance, says that meeting minutes of the Bank of England will probably indicate the MPC is taking stock of external risks linked to recent developments in China. Of course, everyone will be waiting for also the words from Mark Carney, who will speak today as well, some 45 minutes after the interest rate is announced, and everyone will be waiting for his comments on the recent market volatility and
I'm sorry, we are having a technical glitch, so Max will join from my account.
Okay, thank you very much, Eugenia, for helping me in such a difficult at this moment. But sorry for such technical issue we currently actually have. So I will yes continue with actually I think we have to move on to the technical analysis already, because there are also some interesting comments from different banks all across the world. And you can read that article on Bloomberg. There are really interesting thoughts to read. Okay, I will now move on to the technical part, since we have just some 4.5 minutes to go till the data is finally released, and we'll have the data in the chat section. Unfortunately, right now I don't have the screen sharing to show you the most recent developments of the cable, actually, which we are discussing today. But our outlook is negative towards this currency pair right now, because as I have just said, and Eugenia has already mentioned that fact, that some volatility of the markets just recently will most probably weigh on the decision of the Bank of England, and it is likely that the vote distribution will at the best remain unchanged today. So as you can see, we have the sell market for the pound right now, even though the market sentiment actually is slightly bullish at the moment. But on the other hand, the majority of the pending orders on this currency pair are still set to sell the sterling versus the American dollar. And mentioning the market sentiment provided by other market participants, we have the mixed distribution between bulls and bears at the moment. So, for instance, Saxa Group traders are quite bearish right now, while others are, Oanda is slightly bullish, while daily FX traders are strongly bullish, but their sentiment has bearish signals at the moment. So, actually now we should have moved on to the discussion of the currency pair itself, but I don't have actually the screen sharing at the moment. Okay, I think it's a good idea of Eugenia to put her webcam on the screen, but actually it's very bad. I think it's not a good idea to do that right now. Okay, I'll continue just speaking and looking at the chart. Actually, the pair is at the moment trading at 1.5389 level, and we expect the initial market reaction not to be that strong today, because it's not a super Thursday as we have had it last month. And if you look at the market reactions, of the previous 5 months, you can see that the average reactions were not that strong for both the meeting minutes and the official bank rate. Okay, I hope that now we'll try to sort the problem out. Oh yes, we have the screen sharing at the moment. That's great. Thank you very much. My lovely colleagues helped me. Okay, so as I have said, the average reaction for the last 5 months was just some 18-20 pips, and therefore we don't have the take profit and stop loss levels too far away from the current trading level of the pair. We'll go conservative, and we will see whether there is at all any reaction on the on this currency pair, because if there is no surprise, the pair may also react and trade sideways, in the sideways trend. But of course, we still have some 50 seconds to go till the data is finally released, and yes, I would also love to mention the technical indicators, but unfortunately I don't see them at the moment. But as I remember, they have pointed slightly to the upside on the pound, right? Some couple of minutes ago. So quite mixed actually situation. It will be quite interesting to see what the vote distribution actually between the MPC members will be. Will there be 009 or 108 distribution? But we will see just in a couple of seconds. We'll have the data in the chat section. If I hope the Bloomberg terminal works as usually good. Okay, I think we just have a couple of seconds to go. We actually see some upward reaction on the pound. Wow, very strong reaction indeed. Unfortunately, I cannot move the chart, but there is an upward reaction on the pound at the moment, and we have a very strong reaction right now. So yes, we have the official bank rate both unchanged, actually 108 for that. Of course, I hope, even though the data is not published yet, there is no surprise at the official bank rate, and it's well, of course, it makes sense because the majority still voted in favor of keeping the rate unchanged. But it's still a kind of a bullish signal. It used to be a bullish signal, right? As we can see for the sterling, because I think that can be a kind of surprise for some parts of the traders, because weakness in China really raised the hopes that the distribution could be 009 again, but it's not. One member of the MPC committee, I hope it's still Ian McCafferty, he voted in favor of raising interest rates already right now, even though the average estimate is saying that the Bank of England will raise rates at earlier in February of the next year. But still, nevertheless, even despite such a volatility in China, it seems to be a good signal for the market that the Bank of England is still on the track of raising interest rates sometime within, I guess, half year from now already. But of course, we'll wait for the press conference of Mark Carney. He will speak in some 45 minutes from now, and it will be really interesting indeed to hear from him on when he's going to answer the questions, especially on China and the recent market volatility, and what the Bank of England is going to do next with its monetary policy. So I guess that for now that will be all from my side for today. Thank you very much for your attention. I wish you all a great day ahead. See you all tomorrow when we are going to have the research webinar at 12 p.m. GMT. So yes, see you all tomorrow. Thank you very much. Have a great day and bye bye.
Hello guys, got the volatility. So how are you today? So let's see how the pound looks like. Okay. This is our pound, and as mentioned yesterday, I'm expecting a bearish pattern here on the daily chart. This is a correction. Okay, this is a correction. This here is the zero line, and I'm expecting a bearish pattern from the zero line. So there is still room for the CCI to go a little bit higher. I expect to the 50 Fibo